If you look at Bitcoin just as a store of value, it's a superior store of value to real estate, and it deflates at a rate that housing, even if you buy it on leverage and you finance the purchase of a house, you cannot keep up with the deflation of Bitcoin. Bitcoin has completely changed the dynamic because people now need to look for a different store of value. Real estate has been the number one store of value for the past 50 years. Since 1971, when the US went off the gold standard, real estate has pretty much become the preferred store of value globally. 67% of the world's wealth, around $300 trillion, are saved in real estate. But now that we have Bitcoin, the opportunity cost of putting your money in real estate is just too high.
In a recent appearance on the Preston Pish podcast, Leon Wankum notes a significant paradigm shift in the perceived store of value from real estate to Bitcoin, and the potential challenges this poses for real estate investors. He describes Bitcoin as a superior store of value compared to real estate due to its deflationary nature and historical performance. Leon estimates that up to 70% of the value of real estate is derived not from its physical utility, i.e. providing shelter or generating rental income, but from its perceived value as an investment or hedge against inflation. As Bitcoin gains prominence as a superior store of value, the monetary premium traditionally associated with real estate may gradually shift towards Bitcoin. This shift could potentially lead to a re-evaluation of real estate prices, aligning them more closely with their utility value rather than speculative or investment-driven factors. Stick around until the end, when Leon shares his investment strategy, which involves allocating a portion of profits from real estate investments into Bitcoin. If you're new to the channel, please consider hitting that subscribe button and turning on notifications so you never miss the most insightful Bitcoiner interviews on YouTube. Giving this video a thumbs up will help it reach more like-minded people. Now, let's dive into today's interview highlights.
Right, so saving in Bitcoin just makes more sense. Now the question is, what problem does this bring for real estate investors? And if you look at the balance sheet of a real estate company, on the liability side, you'll have mostly, not only, but you have debt. Because real estate is a very debt-intense business. And as real interest rates go up, the liability side of the balance sheet is growing. It's growing massively. And now it has another negative consequence. As interest rates go up, financing becomes less affordable because the cost of financing over time increases. So less people can afford housing, which leads to less demand. And what we are seeing right now already, demand for real estate is going down, which means that prices of real estate go down. So if you're a real estate developer, you're faced with the issue of having increase in debt burden, but at the same time, there's less people willing to buy housing. And I believe it's very important for a real estate investor to bring Bitcoin on their balance sheet, right? Especially millennials and Gen Z, they have been priced out of real estate already because real estate has become so expensive. And now they can't afford it either because of financing. So as a real estate developer, in order to survive, I think you need to bring in Bitcoin on your balance sheet. Bitcoin has, as we know, excellent monetary properties, and it will increase in price with increasing demand. And the only way to weather the inflationary pressure of the fiat system as a real estate developer is by owning Bitcoin and participating in the value increase of Bitcoin because real estate is a very credit-intense business. If you're not able to increase your credit worthiness, you're not able to compete. And I believe going forward, banks will understand that those companies that hold Bitcoin on their balance sheet, they will be more creditworthy. And that allows you as a real estate developer to leverage the value of your real estate in Bitcoin, potentially refinance your real estate, buy Bitcoin with the additional capital, and build a healthy balance sheet that allows you to stay competitive. I believe that a large number of real estate developers will go bust within the next coming 18 months. We can already see it in Europe especially, but we can also see it in the US.
Leon predicts that a significant number of real estate developers may face financial distress within the next 18 months and suggests a potential shakeup in the industry. This could lead to consolidation, bankruptcies, or shifts in investment strategies among real estate companies as they adapt to changing market dynamics. The integration of Bitcoin into real estate investment strategies represents a response to the evolving financial landscape and the need to address challenges posed by rising interest rates and shifting investor preferences. In the following clips, Leon highlights several key points regarding the potential impact of Bitcoin on the real estate market and the broader financial landscape.
For the foreseeable future, I don't believe that interest rates or mortgage rates come down back to 3%. Inflation is just too high. You need interest rate at a 4 or 5% level in order to deal with inflation. That's number one. And number two, we are witnessing a paradigm shift. So why is real estate so expensive? It's not so expensive because of its utility value. It is so expensive because it has been priced away from its utility value. There's a financialization process that happened with the asset of real estate because as money loses purchasing power, people are forced to invest into scarce assets, and real estate has been the scarcest asset that has been accessible. But now we have Bitcoin. Bitcoin is a much better store of value. So I am assuming that most of the monetary premium that sits in real estate, and it's up to 70% in the US and in Europe, up to 70% of the value of real estate is the monetary premium it carries as a store of value. I believe as Bitcoin comes into the equation, that monetary premium will eventually, over time, flow into Bitcoin. Real estate will collapse to its utility value, and the deflation of Bitcoin will be multiple times higher than the money that can be made with real estate. In 1995, if you were running a shop on a high street, you were forced to learn about the internet because e-commerce came in, and e-commerce as a business model disrupted your business model. And I believe that Bitcoin is disrupting the real estate business model similar to how e-commerce disrupted the retail business model. And similar to how email is now the preferred way of sending information, I believe Bitcoin will become the preferred way of storing value. At this point of time, the preferred way of storing value is real estate. And because Bitcoin is superior as a store of value, it's scarcer, it is highly liquid, you can move it in times of crisis, it is difficult to tax and to destroy, and cheaper to maintain. Bitcoin is in direct competition to real estate in its function as a store of value. About 18 months ago, we decided that we will not buy any new properties because it has become basically a bad business model with rising interest rates. And we've decided to allocate 20 to 25% of our profits that we've made by selling real estate to invest it into Bitcoin. I believe it is important to basically participate in the deflation of Bitcoin that is going to accelerate, especially the upcoming halving in April. And as the halving kicks in and we have a supply shock, we believe that Bitcoin will deflate very fast, especially with the ETF prospects coming in.
Real estate prices are attributed not only to their utility value, but also to a monetary premium driven by financialization. This premium is seen as vulnerable to being diverted to Bitcoin, which is perceived as a superior sort of value due to its scarcity, liquidity, portability, resistance to taxation, and lower maintenance costs. Leon asserts that Bitcoin is direct competition to real estate as a store of value. He suggests that the deflationary nature of Bitcoin, especially following events like the upcoming halving and ETF adoption, will make it more attractive to investors compared to real estate. This perspective portrays Bitcoin as a disruptive force in the traditional real estate market, challenging the dominance of real estate as a store of value and prompting investors to reconsider their investment strategies in light of Bitcoin's advantages. We hope you've enjoyed today's video. If you'd like to watch the full podcast episode, follow the link in the video description below. See you in the next one.